Uganda's economy continued to grow in the 2015-16 financial year, albeit at a slower pace of 4.6% compared to a 5% recorded in the financial year 2014-15. This is according to the Kampala property market report released by Knight Frank. Dennis Lutalo is the head property management commercial, Knight Frank.
So going forward, what you try to tell the investors is there's actual appetite to have the critical mass in the affordable housing space, and that's where we need to focus. Because once you address that, then if I bought a house 3 years ago, $50,000, and I sell it for $70,000, I can use the $20,000 difference to pay as a deposit to my next, middle-income house.
The decline in real GDP growth is attributed to volatilities experienced by the economy, such as the steady ascent of the US dollar against the shilling. Other factors included the delays in the oil sector and a cautious and risk-aversion attitude from stakeholders and players in the property market due to the general elections, says Judy Rugasira, the head retail, Knight Frank.
The target markets where the demand was coming from have shrunk or restructured. That was mainly the oil and gas sectors. They've shrunk. So the demand is not as high and as rapid as we would want it to be, but there is still a lot coming, particularly from government.
With negative sentiment, people are concerned with spending money, consumption decreases. We've seen that happen in the local market, specifically in the FMCG goods. There's year-on-year, probably in the region of about 20% decrease in retail sales.
According to Knight Frank report, the office sector has been the hardest hit of all the property sectors over the past 24 months, and saw prime rents falling to as low as $12 per square meter in some properties.
So we don't think it's going to hit rock bottom, and certainly we don't feel that it's going to get any worse than it is.
The good news is that the property market is expected to bounce back, but with caution, since interest rates remain high, shilling remains weak, and demand for both prime office and residential accommodation is still lagging behind supply. Dennis Igoa for UBC Business.